I don't think interest rates are going to go up again unless there's some nasty surprise on the inflation front out there that nobody is foreseeing at the moment. But I suspect it will take longer for interest rates to come down than the financial markets and many other economists have been suggesting. That's partly because interest rates haven't gone up here as much as in other countries. They've gone up a lot, no one's suggesting otherwise, but the Reserve Bank's cash rate of 4.35%, as it's been since last November, is lower than in continental Europe, where it's 4.5%, the UK and Canada, where it's 5%, the US, where it's 5.38%, and New Zealand, where it's 5.5%. And the Reserve Bank of Australia was later to start raising interest rates than most of its peers in other countries. It didn't start until May of 2022, whereas over the other side of the Tasman, for example, the Reserve Bank of New Zealand started lifting rates in August 2021. The Bank of England started lifting British rates in December of 2021. We were slower to start, and we haven't raised them by as much. To me, it stands to reason, therefore, that inflation will probably come down a bit more slowly here than in some of those other countries. And so, therefore, too, will interest rates. And an additional reason for saying that is that in Australia, most people who are working or earning an income in some other way are going to get income tax cuts starting on the 1st of July, that in total are the equivalent of 2 25 basis point reductions in the Reserve Bank's official cash rate. Now, the benefits of that are going to be distributed differently across households than the impact of 2 rate cuts, but the Reserve Bank isn't fussed about that. What it's concerned is the impact of that on aggregate household spending, and it will be a stimulus of sorts to aggregate household spending. So, why, when inflation is still likely to be well above where the Reserve Bank wants it to be when those tax cuts take effect, why would the Reserve Bank be doubling up on their impact by cutting interest rates as well? I don't think rates are going to start coming down in this country until February next year.
Okay. That's interesting. So, because I sort of sense the same, just from a common sense point of view, Saul, and we'll get into interest rates a little bit deeper in a few minutes, but my sense, just to make a statement rather than a question, is that all the factors are saying, like, unemployment's so low, the economy's still ticking along, inflation's high, property prices are going up. It just doesn't make common sense to me to see that the government would start pushing interest rates down at this stage.